All right, so this video we're going to be going over the Pipsurfer manual trading ecosystem. And basically what you see on the screen is a combination of two of my indicators and a trade manager that can manage your trades automatically after you place them. Now, starting with the core indicator is the Pipsurfer, and that's what you see on your chart on my screen right now. So Pipsurfer basically uses trend, structure, and momentum to give a visual representation of really how traders actually see the market. So, what the mindset was behind the software was to make it to where a trader can identify what the trend is, where are points of interest in the market, what the structure is, and when there's momentum. If you're able to understand those things or be able to identify those four things, then you have a great picture of what's going on in the market and you can make better trades. On top of that, Pipsurfer also gives potential points of entry that you can take within the market. Now, not every point that it gives you'll take, and there's strategies that you can use to differentiate which of the entries you'll take for what strategy. Now, getting into just the makeup of what you're seeing right now. We'll go with the trend first. So there's multiple ways to understand the trend using Pipsurfer. The first way is looking at the color sets of the candles. So the red and pink being your downtrend, the purple and lavender being your kind of neutral trend, and then the blue and light blue being your upward trend candles where there's upward momentum or bullish momentum in the market. The second way is to look at the multi-time frame trend indicator, which uses a set of data parameters to quantify what the trend is on that particular time frame. So usually traders have to look at multiple time frames to see where they are within trend, which takes time to not only analyze one time frame but analyze multiple other time frames to get one trade. So with the multi-time frame trend indicator, you're able to see what's going on, at least is from a directional standpoint, on each part of the market or each time of the market. So if you're able to find an entry that more so correlates with all the time frames or even multiple time frames, then you have a really solid entry because you're not going against the grain on, say, a bigger time frame. Because usually the bigger time frames supersede the motion in the smaller time frames because of the larger data sets of time that's put into the market. Now, the third and final way to look at trend is to look at the market structure lines here. So if you're familiar with market structure, trend is higher highs. So you have kind of like higher highs of the market right now. It's in a downtrend, so I'll use that example. A downtrend is lower lows followed by lower highs. So lower high meaning that this high is lower than the previous high. Lower low meaning that this low is lower than the previous low that's identified. You'll see that when that happens, you'll get a red or pinkish line to signify that that is downward market structure at play. So you have three different ways of identifying trend in a very quick manner and a very easy manner. Now, the next step is structuring it itself. And the structure comes in the form of the boxes. The boxes, the red being your the supply boxes where people look to sell at these areas. The blue being your demand boxes. You also have a gray box, which is what's called imbalance. Imbalance is a point of interest in the market because these are points where, if you think of the market like a checkbook, where you have price going in one direction and no retest to balance that checkbook. So as you see here, when there's an imbalance created, the market tends to dip into that imbalance, a lot of times reacting as you see here. It reacted off of with a strong wick here and reacted with a strong wick there off of that imbalance. Then it briefly touched this imbalance, reacted off of that. Every imbalance is not going to have a big reaction off of, but imbalances do have a reaction because with this particular candle here, maybe you see how it has a downward wick. So maybe that candle went up into this area, went down and went back up. That was a reaction, just not one to cause a trend continuation or a rejection move, but it was a reaction. So a lot of times those imbalances have reactions. So having a software that can point those out for you automatically without you having to dig and look through the markets make things a lot easier for you. The last part being the momentum aspect, and that's taken care of by the tide meter. The tide meter is a momentum indication that basically just goes over what momentum is in control at that particular moment and how big that control is. So when you see here, when it's red and higher, you tend to see sharper moves. You see sharper moves, red and higher, sharper moves. When it's lower, you see the blue here. So if I was to line this up, you see the blue, and you see that there's small little candles where the blue is, and the blue is at a short blue. So that gives you an indication of how strong the momentum is and where the momentum is going. For most traders, figuring out where the momentum is going is a very hard thing for especially beginner traders. So having something that simplifies that makes it easy for you. So you see here, strong red moves. You see there's a sharp move down. So different ways of identifying the market, taking a lot of data and making it very simple. This particular part here is just an addition. A moving average is not part of the Pipsurfer. So just as a sidebar there. Now getting into the actual entries for Pipsurfer, there's two main entries that are strategies that you can look at. The first strategy is the wave strategy. The wave strategy uses the market structure points and trend to confirm whether or not to use the arrows. Now, there's not a lot of false signals, but each indicator, sometimes you may get some false signals no matter how well you make the indicator. So the main thing to understand is what signals to use or what is your framework for taking the signal. So for the market structure, the wave entry signal, you have a way of kind of doing that. So the way it works is when an arrow comes up, all you're going to do is check to see if, this is for the first strategy, the wave strategy. All you're going to do is check to see if that arrow, if the market structure is still bearish. So you see here, the market structure is still bearish. So you see that there. The second thing you're going to do is see if the market is trending in a time frame higher than the time frame you're looking at. So right now we're looking at the 1 hour time frame. So if I was looking at the market right now, these colors are based off the live market. If I was looking at the market right now and I see this particular arrow, then I would just check to see if the market above it or the time frame above it, the trend corresponds with the entry. Now in this case, there's a reason I picked this one. This one was a loss. But when you lose one time, that doesn't mean that you didn't have the right idea. As you see here, the idea did play out, it just played out later. So if you happen to take the trade and lose the trade, what I like to do is a second chance entry. This is something that traders will do that understand that there's a move to be made. Now, it's dangerous to keep trading the same move over and over again, hoping for a different result. But to understand that, you have a structured way of re-entering the market in the event of a loss helps you gain an edge in your trading percentages. So this one was a loss. But you see the very next one, this one here, very next one was a very accurate signal. So you look at this arrow, as long as this high didn't go above the previous high and keeps that market structure, because if it went above the previous high, this would have turned blue. Since it didn't turn blue, and it stayed below this previous high, the market structure is still intact to go bearish. So as long as that's still there, you can re-enter the market to catch the same move. And what I mean by the same move is you're looking for a sell after this pullback. The sell didn't happen here, but it happened here. So you're giving yourself two chances to catch the continuation. After that, I wouldn't try to retrade that particular setup. I would look at the other pairs or the other markets and look for another entry. So you have that aspect of it. The other aspect is the tide, which is the second strategy, is the tide strategy. So you have the wave strategy, which uses more of the market structure. Like you can see how it makes little waves, so that's why I call it the wave strategy. The second one is the tide strategy. The tide strategy is going to use the tide meter. It's going to use the tide meter and the arrows to, as well as the supply and demand zones. Those are going to be the three components for that strategy. So basically what you're going to look for is you're going to look for the market to touch and test either a supply area or a demand area down here. So the market, you see how it makes this move down. Say if you didn't catch the wave entry, market makes this move down. It tests into, you see right here, it tests into with this wick. It gets into that demand area. And it rejects off that demand area. And then you see the arrow happen. So along with this arrow, you also see that the tide meter changed recently from blue to red, meaning that the momentum shifted back in your direction. So when those three things match, that's an entry for the tide strategy. Now the tide strategy, I love this strategy because there's multiple, it'll give you multiple chances because sometimes you'll get a little bit of, pushback from the market and it'll give you, a little bit more blue momentum. You see, changes right here, changes back to blue, and then you get a second tide entry. So I like the tide entry because it gives you a couple of chances to get into the market using that entry. So that way you're not missing moves that you could potentially be profiting off of. So that's that aspect. So just off of one particular pair, you have it to where you can catch a lot of moves. But let's say you're an adventurous trader or you don't want to miss an opportunity. There's a way in order for you to do that. So what I'm going to do is going to open a new chart, and with your charts, your Metatrader, you can have a way to where you can have what's called the Pipsurfer Dashboard. So let me go in here. Let me show you basically how you would set up for this particular aspect of the indicator, which is the third indicator within my trading ecosystem. So you have here, you have that right there. Perfect. So now it's black. So all you have to do, right click, go to properties, and click none from grid all the way down to volumes. So you would just switch it to none at the top. So once you set that up, then you would open up the Pipsurfer Dashboard. Now the Pipsurfer Dashboard is going to give you kind of a heat map of where entries are happening in the market. So that way you don't have to go, and this is about being efficient, you don't have to go and basically siphon through each and every pair manually to see if there's an entry. The Pipsurfer Dashboard looks at all of the charts that you have here. And even if you don't have that chart pulled up, say you want to add gold, for example, you can go into the settings of the Pipsurfer Dashboard, go into indicators, and basically you would put what your broker calls gold. So there's different ways that brokers list gold. Mine lists gold as XAU, USD, just like that. And I'll put it in all capitals after a comma. So you put a comma and then your indications. Some brokers just have gold, GOLD, in all caps. So it depends on how your broker listed. So I'm going to add gold, into it, and it adds it right here. And now it's going to look for trades within that area. Each time you add a pair, the Pipsurfer dashboard will refresh. So you see how the trades went away. You see where it's 1 minute, 5 minute, 15 minutes. So the way the Pipsurfer dashboard will work, every time that interval cycles over again, so 1 minute cycles over, 5 minute cycles over, it will refresh any minute or any 5 minutes. And whatever trades are happening at that particular time, it'll alert you for those trades. Now, I'm doing this video in a not so busy time of the day, so it may take a while before it alerts me. But when it's London session, New York session, this thing is sounding off like Christmas. So you're not going to miss different entries. So let's go back to our chart here. I believe we were looking at GBP USD. All right. So that takes care of that. So now you have a way to analyze the charts fast, find entries fast with the Pipsurfer dashboard. Now let's manage your trades in a fast and efficient way. So that's going to take us to the Pipsurfer Trade Manager. Now the Pipsurfer Trade Manager, I love it because you're able to be flexible with this particular software. And what I mean by that is that when it comes to true risk management, the best way to pick stop losses or pick take profits is to go based off the volatility of the market, asset, or pair that you're trading. Not everybody's going to know how to do that. So what I love with the Trade Manager and what we designed into it is to take into account the volatility, the average volatility for that pair in that particular period of time or period of days. So using that, it will determine what the average daily range is and then create stop losses and take profits based off of that. You can control that. So you see here, you have the default setting is 30% of the average daily range is what it's going to use for its automatic stop loss. If you want to be more conservative or give more grace, you can do 40%. You see how it changes the automatic stop losses. Now the automatic stop losses, if you have the take profits on automatic, the take profits will basically go in and adjust based off the stop loss. The reason is you want to have good risk management. So it'll tell you what those take profits are from a risk management standpoint. How it does that is if we go into the settings of the EA, you can determine what you want to do from a risk perspective, a risk per trade. It gives you the lot size for that particular pair based off of your balance in the account. Then you have the fixed stop loss. If you want to do just a flat stop loss, you can do that. You can also, when you go into the trade manager, you can just click the button and it changes to the fixed stop loss. So the fixed stop loss, now you can do fixed stop loss and automatic take profits. So the automatic take profits will calculate based off the fixed stop loss versus the automatic stop loss. Going back into the settings, the stop losses are, fixed or, automatic, but going into the take profits, you can choose how you want to do your take profits. So I have a risk management setup preset to give you, a good edge in the market. If you go for 170% or 70% profit for every move minimum, you tend to have, great risk management. So if that's my first take profit and I do 170, it's going to do 170% of whatever stop loss I pick. So that's what gives you that number. The take profit 2 it'll do 225%. You can change it to whatever you want. It's just defaults that work for me. So it'll go based off of what you set here, based off of fixed or auto. Now, what the trade manager is really good at is splitting positions with the market. So this is something that's hard to do from a calculation standpoint in real time yourself. You have to calculate what would be a good partial take profit to take. And once you calculate that, then you have to calculate that into the actual trade. So it's two calculations you have to do just to have a partial take profit. So one thing that helps is in the settings, you can choose to close whatever percentage of the trade at the take profit. So one, so the first one, you can close, 30% of the trade at take profit 1. You can close here. You can close 50% of the trade at take profit 2. So in this example, what you want to make sure you do is you want to make sure that they all equal, so the 3 percentages equal 100, unless you disable take profit 3. So take profit 3, not everybody uses take profit 3 in their own trading strategy. So you have an option to enable or disable using that within the settings. So if you disable it, what you have to do is reallocate the 20% into whatever take profit you want to do, whether it's 1 or 2. So something to remember there. You can also enable for trailing stop losses. So trailing start, meaning that after a trade is in 28 pips of profit, then it will trail 10 pips behind the market. So as the market goes up, it'll trail 10 pips behind, and the market goes down. It stays at that last point where it trailed, and then it'll follow it 10 pips away until it reverses 10 pips. So that's how trailing stop loss works. For break even, you can choose to move your stop profit up one time using break even settings. So in this setting, when the profit is up 24 pips, you can move your stop loss from whatever the stop loss is in the negative to whatever you annotate here for the positive. So if you're like, I want to keep 12 pips of the 24 after the market comes up, so you secure, half of your break-even point, then it will move it from, like, say, if it's 30 pips, it'll move it from negative 30 pips to being into the profit, your stop loss being positive 12 pips. So that makes it very, very easy for you to manage. And then you can also put for your break-even settings, you can change what Metatrader will alert you with. So you can put something like break-even reached. So that way, even if you're not around your charts, you can get a notification on your phone from Metatrader that the break-even point was reached, and your trade is now secure. You don't have to worry about it being in the negative because you've secured profit. So it takes a little anxiety off when you're trading and you're not knowing what's going on while you have money at risk. So I wanted to put that feature in there. So that's basically the settings. The rest is just appearance settings that you wouldn't really mess with. The last part is that you can close your trades or enter a trade with the trade manager as well. So different ways to use this software, make it easy for you. So this is the vision of it. You have a software that makes looking at the charts very easy. Because if I was to I'm not even going to take that off of that chart. What I'm going to do is make this chart bare. If I was to just have this chart, no indicator, and tell you, okay, give me something as far as a technical analysis. Now you have to do everything manually. Now you have to figure out, okay, this may be a supply zone. Okay, let me look around and get off of auto scroll. Look around. Okay, now this may be a demand zone here. That may be another demand zone. There's an imbalance here. There's another imbalance here that got filled out. So you have to go manually find all these different data points in the market to give an analysis. But if you have the Pipsurfer software, all of that's done for you. It makes it easy. Even if I switch charts to a different pair, it goes right into it, analyzes it automatically. See how I just switch charts? I'll switch it again. So I'll switch it from CAD JPY to Euro JPY. Very seamless software. See, USD CAD. It shows you everything. The take profits change based off the volatility. So you see here, it read the volatility, has all of the take profits and stop losses adjusted to that volatility. I go here, I can change it again. You see how it changes with that. Very seamless software. So if you want to get access to it, there'll be links where you can get access to the Pipsurfer software. Each one of the softwares is a separate access. So that way you can pick and choose what you want to use. Hopefully this video helps, and definitely let me know, DM me if you have any questions. And then you see here, right as I end the video, you see the Pipsurfer dashboard coming back alive. So giving you entries where you can take it. So that's why I love Pipsurfer, because even when you forget about certain things, it won't forget about you.